On May 12, 2023, I published a video on TSLY, and at that time it was paying an annualized yield of 39%. Even though I loved the yield, I explained why, long-term, I didn't like their strategy. Since I released that video, the dividends actually went up, and the price also went up a lot. Let's see what's going on. TSLY is an ETF that uses the volatility of Tesla stock to generate monthly income. It does this by selling call options. The basic concept is that they receive an option premium, that's the income that they pass on to you, in exchange for giving up a portion of Tesla stock's upside. I said basic concept because there's actually more to it than that. Unlike, say, YieldMax, they don't actually hold the stock. I've already made a video that goes into more detail about how TSLY works and the pros and cons of their strategy. This video will make more sense if you watch that video first. So if you haven't seen it, we'll wait. These YouTubers said they bought TSLY for its enormous yield, and currently that yield is 39.46%. Now, obviously, that number makes no sense.
Not a sponsor.
Because given enough time, a yield that high would make...
All right, that's enough of the old video. I'll assume that you pause this one and watch that one. There's a link in the description.
Today's video is an update. We'll look at why is TSLY doing so well recently, can it continue, and have I changed my mind about buying this fund? Because I was fairly negative on it in the last video. Let's start with the dividend history. It's short because TSLY was created in November of 2022. Here's where I released the previous video about TSLY. The dividend was clearly trending down. In that video, I said that their strategy was flawed, so of course, after that, the dividends went on to shoot up to record highs. Hence the need for this video. The annual yield is anybody's guess because the dividend is all over the place. But if we take the last dividend, which was a very generous $1.07, and multiply it by 12, we get $12.84, divided by today's price of $17.61, and we get an annualized yield of 73%, not 7.3%, 73%. Mind-boggling. A quick disclaimer, I'm not a financial advisor. Since I retired in 2017, I became a lot more motivated to research my investments because they pay for everything. And when I find something interesting, I make a video about it. So why is TSLY doing so well? With such a massive dividend, you don't really need price appreciation. But since I released that video on May 12th, TSLY has done exactly that. Back then, it was priced at $13.44, so it has actually appreciated by 31% in just over 2 months, which is crazy. Add the dividends onto that, and the total return for TSLY jumps up to a massive 48%. It makes the S&P 500 look like it's standing still. So before you bet the farm on TSLY, let's take a look at why it's doing so well. The most important factor is that Tesla stock has been on a tear. If you bought Tesla stock on May 12th, you'd be sitting on a return of 68% as I record this. That's fantastic for Tesla, but it highlights an important point. While Tesla appreciated by 68% in 63 days, TSLY only appreciated half that amount. And with the dividends, the return still fell well short of 68%. So clearly, if you're a Tesla bull, you would have been far better off just holding Tesla stock during that same period. I was wondering if volatility was particularly high during that period because higher volatility would have resulted in higher option income. Surprisingly, no. By Tesla standards, the volatility wasn't particularly high. For context, Tesla's volatility over the past 6 months is roughly double that of a more mature tech company like Microsoft, for example. Tesla has been volatile compared to other stocks, but not any more than usual. So what have we learned? When Tesla stock goes up, so does TSLY. As I explained in the TSLY review, the upside is limited to about 15% per month. But that's still enough to produce an impressive return. As long as Tesla keeps appreciating at about 1% per day, in 10 months' time, it'll be up 365%, and TSLY will capture a decent chunk of that. Easy. I'm being facetious. Tesla was oversold and it bounced back. At some point, it'll be overbought and it'll have another huge correction. That's just what it does. The Tesla fanboys and the haters ensure it doesn't ever move in a straight line for a long period of time. So what happens when Tesla inevitably does have a correction? does it matter? Let's take a look at how Tesla price action has affected TSLY since November when TSLY was created. If we assume you're a retiree and you withdrew the TSLY dividends, then based on price alone, TSLY has been a disaster. When Tesla corrected in late 22, a lot of people forget that, TSLY took the full hit and it never really recovered in terms of price. A retiree had some nice dividends to spend, but their principal had shrunk. And that's despite a massive Tesla bull run. But to be fair to TSLY, the dividends are huge, so let's include them by looking at total returns since inception. When we add the dividends, we can see that after both stocks crashed in late 2022, the dividends weren't enough to allow TSLY to keep up with Tesla stock. In simple terms, Tesla goes up and down a lot, but TSLY goes down a lot and then up a little. Yes, if you include the dividends, it has recovered to above zero, a positive 28%. But to do that required a massive bull run from Tesla stock. And prior to May 30th, 2023, TSLY, even with those gigantic dividends, spent most of those 233 days running at a loss. TSLY investors have enjoyed a nice little run during these past few months, and good for them. However, it doesn't change my opinion about TSLY. I still believe it's fundamentally flawed as a long-term income investment, which is what this channel is all about. The volatility that produces high income is the same volatility that will gradually eat away at the assets of the fund. The losses will be greater than the gains, and the gap between Tesla stock and TSLY will continue to widen. Debating the pros and cons of TSLY is a pretty hot topic at the moment, and since my last video, 7 new articles have appeared on Seeking Alpha for this fund. So for a more in-depth breakdown, check those out. I'll include a link in the description to my favorite article of the 7. I don't buy any stock or fund without first researching it on Seeking Alpha. I'll put a link in the description for a free trial. I've seen a lot of comments in investment forums along the lines of, I'm up X% on TSLY this year, great fund, or just received a huge dividend, great fund. And I think these are terrible reasons to buy a fund. Price up, big dividend, it just doesn't make sense. So in summary, sometimes TSLY works well over the short term, and sometimes it's a disaster. If you can time that well, good luck to you, but it's not for me. Before I go, I mostly make videos about stocks and funds paying yields of about 6 to 12%, but if you're only interested in the highest yields, I just made a new playlist for those yielding above 10% called Turbo Yields. These aren't suitable for everybody, but I wanted to make them easier to find. That wraps it up for this update on TSLY. More armchair income coming soon.